Well, welcome to another trading week right here in September, and definitely happy school resumption week there. And shout out to all the parents there having to cough up higher fees going into this new sessions there. Well, let's get to the top stories that set your agenda now, starting with how your money performed last week. We did get a positive outing last week. This snap the losses that we saw in the previous weeks there, and it was more of a cautious streak. The market added like 985 billion naira for the week. The all-share index advanced 1.13% week on week to close at 140,545. This start the week much lower than that, while yet-to-date gains climbed to 36.7%. Key drivers included gains in Lafarge Africa, Zenith Bank, UBA, Dangote Sugar, with most sectors ending in positive territory there. And there you have it, the top gainers for the week. eTransact International PLC top there with a big 45.15% gain there. Hopefully, you were able to buy at 10 naira. Then we see that close for the week there at 14 naira. Then we see that's the market performance, 1.12%. This snap about three or 4 weeks of losses. That's from the previous weeks before then. But, definitely we'll see how things pan out. This week we have inflation numbers coming up for Nigeria. That's supposed to come out today. We're looking out for the MBS to get that data. Maybe by 12, we'll give you updates on Business Incorporated for that. Let's get a check on all the news. Now, the Central Securities Clearing System, that's Cscs PLC, they said they've completed major infrastructure upgrades and operational reviews ahead. That's ahead of the transition to a faster settlement there. It's all about how many days it takes to get your money after making a sale there of if you're buying or selling a stock. From November 28th, the market will adopt the trade day plus 2 model. That's the trade day plus 2 working days before you get value. Many investors receive shares or cash in 2 working days after a transaction. At a stakeholder webinar themed Advancing Market Efficiency Through T+2 Settlements, CSCS disclosed that a committee was set up to benchmark its processes against global standards, ensuring the clearinghouse is ready for a seamless switch. Now we see the SEC, they're eyeing phased adoption of ISSB. The Securities and Exchange Commission, I say they're weighing a phased rollout of global sustainability disclosure standards in Nigeria. The SEC Director General, Dr. Momotimi Agama, revealed over the weekend that the framework developed by the International Organization of Securities Commissions, as IOSCO, and International Sustainability Standards Board, ISSB, will be adopted to suit Nigeria's unique realities. He explained that the Commission plans to start with larger listed companies, build capacity, and establish a strong assurance system to verify disclosures, moves aimed at boosting transparency and attracting international investors. And now we see the Dangote refinery has affirmed that it will press ahead with its free fuel distribution logistics initiative, dismissing criticisms from industry stakeholders as attempts to derail progress. The refinery's management rejected claims by the Depot and Petroleum Products Marketers Association of Nigeria, that's Dappman, that recent petrol price reductions are unfair or unsustainable, describing them instead as misleading. According to the Dangote refinery, concerns raised lack legitimacy and stem from vested interests uncomfortable with change. While Dangote insists there will be no going back, Dappman has challenged the refinery's claims, suggesting that the slashing of petrol prices may have broader implications for market stability and competition. All right, let's get a check on our major forex channel there. We see Brent crude starting off the week 0.36% up, $67.23 a barrel. And we see WTI crude did try to make that run back to about $63, $64. But we're starting off at $62.93 a barrel, 0.38%. It's all about geopolitics right now and gauging U.S. fuel demand. We're seeing Ukraine there. We've seen some, escalation, when it comes to what's playing out between Russia and Ukraine. And definitely we know investors have their eyes on that. at this moment. So we'll see how the week plays out for the oil market. To some company news now. Chemical and Allied Products PLC are splashing bold new colors on the future of painting. The company has celebrated 5 years of its Painters Training Academy, an initiative that has already sharpened the skills of over 5,000 painters across the globe. To mark the milestone, CAP PLC rolled out fresh partnerships and unveiled an ambitious target, training another 15,000 painters within the next 2 years, cementing its role as a driving force in industry capacity building. Take a listen.
It's the 5th anniversary of the CAP Painters Training Academy, an initiative designed to empower painters with not just skills and product knowledge, but also the business acumen to help them grow as confident professionals and entrepreneurs. This celebration is to look back at the Academy's impact on the decorative paints industry, as well as to unveil the next step to meet the needs of today's workforce.
Our goal here is that by 2027, we would have trained and reached at least 15,000 painters in Nigeria and outside Nigeria. We want to now develop the capability of our painters in other areas. So how about helping them to set up their business? How about helping them to show up better in the marketplace? As simple as structuring a quotation, writing up a proposal, pricing appropriately, marketing their services.
Since inception, more than 5,000 painters have been trained across the country through the Academy. And now, with a new partnership with the National Business and Technical Examinations Board, NABTEB, the graduates will enjoy double certification.
This means that from today onward, every graduate of this academy will not only receive CAP certificate, but we also earn the NABTEB NABTEB modular trade certificates in painting and decoration, a certificate that is nationally and internationally recognized.
Yes, please.
Other highlights of the anniversary include recognition awards for the top purchasing painters and the announcement of winners of the Business Growth Grant.
Attending CAP, it has really changed a lot of mentality that I have as a painter. That's number one. And also winning these grants, it's going to help me scale up and also step up as a painter, getting more tools to use and also meeting up with deadlines for clients.
In the last 5 years, we've trained over 5,000 painters spanning over 17 states. And you can imagine, just looking at us as a paint manufacturing and distribution company, but we've taken a step above that to ensure that we are training, we're upskilling, and we're transforming the lives of painters. And it's been absolutely amazing to see the transformative effects.
The CAP Painters Training Academy is an initiative of Chemical and Allied Products PLC, one of Nigeria's largest paint manufacturers and distributors with over 65 years of experience in the paints and coatings industry. With the current mission to train over 15,000 painters over the next 2 years, the Academy is setting its sights on creating even more skilled professionals.
And now to our first conversation. We see Nigeria's postponed the introduction of a 5% fuel surcharge, part of its new tax act, until January 1st, 2026. The move reflects concerns that such a levy, could further strain households already battling with high living costs. And, definitely, I guess the government, they can either turn it off or turn it on when they feel like it's time. We also see the government pushing ahead with the rollout of tax identification number system, linking compliance to financial access and inclusion. The big question: how can Nigeria raise, much-needed revenue without worsening the economic burden on citizens? And what does the new tax regime mean for businesses, households, and investors? Joining us to unpack this now, we have Mr. Tajuddin Ibrahim. He's the Director, Research and Strategy at Chapel Hill Denham, joining me right here in the studio. It's good to have you, sir.
Thank you so much for having me.
I'm having you in person, this time after most of these Zoom interactions.
Absolutely.
Fantastic to have you here.
Thank you so much.
But looking at what's playing out so far, you kind of look at the signs, and it shows, in my opinion, that the government needs money.
Absolutely.
The government is trying to raise, revenue and trying to boost the kind of revenue it gets from taxation. We've seen the postponement of that fuel surcharge, and it's coming at a time where, you know, people are dealing with a lot right now. The average consumer seems to be weak. Although we don't get data on consumer strength, you know, in the country, but other clients, they're always checking on the consumer because definitely that affects, you know, business. So talk to me about this balancing act here, raising revenue and not burdening the people.
So I reckon that the government is also aware that Nigerians are going through difficult times, and I believe it is on the back of that they have decided to postpone the implementation of the 5% surcharge. I believe that if we look at the past 24 months, it has largely speaking been challenging for Nigerians on average. So you don't really want to come and add an additional, burden on them in terms of, paying additional fee or surcharge on fuel. And I reckon that, this thing is not new. That is, where I believe Nigerians should also, look at and focus on, because it is like an act. It is the Federal Road Maintenance Agency Amendment Act of 2007. What the current administration is just trying to do is to implement it. Timing is what I believe, they are considering. So it doesn't look good, in my view, that, they implement it, in the current challenging period.
Right, and, definitely, looking at what's playing out also with the tax identification numbers, fantastic. We're trying to expand, the tax net, at this time. But there's also been a lot of, talk about, you don't need to go and get another tin, registration. We've seen, the FIRS, we've seen the committee there, trying to clarify on, how this is going to work.
So honestly speaking, in my view, I believe that, there should be no additional burden on Nigerians in terms of the tax identification number. And I reckon that, the authority is also working around ensuring that, Nigerians are not burdened to say, let us go through another process of, issuing the TIN. In this regard, we have, in my mind, I think what they are working on is to see what do we have, what are the existing data that they have. They have our BVN to start with, which is linked to our bank accounts. They have our NIN, which is linked to our mobile telecommunication numbers. They also have, the tax identification number in itself for those that are already paying taxes. So I reckon what most likely should happen is that if you do not have a tax identification number as we speak, of course you would have an NIN. So when you have an NIN, that should serve as your tax identification number. So you are not, burdened further about going to go and queue or going to places to go and, snap pictures to get new numbers. I think that will not be an efficient way of doing it. We have around 140 million NINs as we speak. Out of the 140 million, if we can take out those that are eligible to pay tax, but currently are not in the tax net, those should be the focus, the target in my mind.
Right, and this looking at what the government is trying to do, at this time, do you think there was a time we missed the opportunity, of getting this tax net as wide as we want it to be, getting everyone, even those that are in the hinterlands, actually register?
Absolutely, we really missed the opportunity. And just like they say there are 2 times to grow a tree. You could have grown a tree 200 years ago. Another good time is now. So which is where, I sort of agree with them that if we really are clamoring for, less dependence on crude oil in terms of the generation of revenue by the government, and we are talking and tilting more towards taxes, then we should be ready to harmonize everything. We should be ready to get it right, and we should importantly be ready to start. The moment we start, it will be to our advantage, because it will be in place forever. What can only come to the front burner is review from time to time. But starting now, to my mind, is a good thing, and I think it is a step in the right direction. We would just only need to review it over time.
Right. And do you think that there's a risk that households may have to pay too many taxes, going forward with, all that we're hearing right now?
I think, it is not so much of a problem if households have to pay more taxes. But what is so much of a big problem is households paying more taxes but not seeing the impacts in their social lives, not seeing the impact in terms of investments by the government in physical infrastructure, which means that we are paying the taxes, we are not seeing the benefits. We are paying higher taxes, and we are also, having to see higher cost of living in the country. So it is more like a lose-win situation. In this case, the masses, to my mind, are losing. And I think that should not be the case. So it is fine to pay taxes, but it is extremely important to see the benefits and feel it and enjoy the benefits of paying taxes to the Nigerian government.
Right. And, in your view, what other sources are there, for this government that you think they're not looking at as a source of revenue?
Well, I think, other sources of revenue that I can think about right now as we speak, I'm not sure there are, many of them, unless if we want to look into areas where we really have not done much work or we have not done any work at all. If we look at the extractive industry, for instance, we talk about, natural resources, apart from crude oil. There are a lot of solid minerals that we really have not, even scratched the surface. And we have them in abundance in the country. Those, to my mind, could be areas of new sources of, generating revenue for the government. And I think it is not something that's going to materialize in a day. It will take time. It will take deliberate effort. It will take strategy. It will take huge investment, not just locally also, but also foreign investment in this case. I think that's another area apart from looking at taxes to boost revenue for the government.
Right, and we've talked about tightening belts, and some would like to see belts being tightened on all sides. What would you say should be the best moves now, from the government side of things to actually, boost transparency? Because we keep talking about, wanting to see some transparency where these funds are actually going.
Absolutely. So transparency, to my mind, can be boosted when the government is deliberate about communicating regularly to the public, about disclosing figures, about publishing authentic figures around projects, about giving updates around percentage of completion of projects. When you don't do all of those and you are getting the taxes, Nigerians and citizens will really be worried that, we are just paying taxes, we are not seeing the impact. Let me give you a very simple example. I think the Taxation Bridge, for instance, was fixed about, a year ago or thereabouts. And as we speak, everyone that uses that bridge can testify that they have done some things here. It may not be to the expectation of all Nigerians, but the reality is that they have done some things. They've put in place some infrastructure on the bridge. We also have a situation where, driving on the bridge, the experience is far better than it was previously. That speaks to results. But before you show results, you can begin to, inform and update the public from time to time. Nothing is wrong with quarterly updates around government projects. We don't have that kind of a development as we speak. But it is something that the government should consider. They should be disciplined around, such a plan. Give us quarterly updates. If you cannot do quarterly, how about, semi-annually? Twice in a year, just come to the public, let them know the taxes you have paid, this is what we have used to do, these are the infrastructure we have put in place, this has reached this stage, this is advanced in level, we need more money. Of course, the public will bring more money. But when there is no transparency, no accountability, no disclosure, no publication of figures, I think it is not the best.
Right, and I'd like to also get your view on, investor sentiment. When you see the body language, of the government, you see that the government is, cash-strapped. They're looking for money. They're trying to, find different ways to raise funds, by raising taxes and all of that. How does all of that play into investor confidence? Do you think businesses get, worried, when taxes go up a lot and they know that that's demand destruction happening on the consumer side of things?
I think the only thing that gets companies worried when taxes are rising is poor implementation of those tax inflows to the government purse. Businesses will be worried that they will affect consumers' pockets and their businesses may not rise as much as they expect. But what would really be a burden to them is that you are taking taxes. Are you going to implement as planned? Are you going to deliver the social infrastructure that is meant for? Or are you going to deliver the physical infrastructure that you are targeting on the back of the tax money you are taking? That, to my mind, is the major worry of many businesses. If that is addressed or removed, then businesses will be happy to see government raise taxes because they believe that, or they will be convinced that the benefits will accrue to them over time. If there is no benefit, or if it will not accrue over time, then all businesses will be worried.
Right, and definitely we've seen the government come up with some policies, and they've had to pull it back or say, okay, we're postponing it for now. How does all of that play into sentiment?
I think the only thing that is constant in the world, as we all know, is change. If we plan to do something and we recognize that the timing is not right, we can make a change of mind. We can change our direction. And, the government, to my mind, should not be rigid on some policy implementation. Otherwise, you will further ruin the pockets of the masses. I reckon that is some of the things that are, playing out. The time for some of these things are not ripe. Don't forget that we have seen a no-go-back policy implementation around two key elements. FX devaluation, there was no going back. They just did it. The second one is subsidy removal on fuel. There was no going back. They just did it. Nothing like facing it over time. So after taking all of those two bitter pills, you really want to reconsider some of the new strategies or plans that you want to implement to see if the timing is right or not.
All right. So definitely timing is everything.
Very, very important.
Very important, at this point. So how optimistic are you, going into 2026? Knowing a lot of things are coming up, then what are you seeing?
Well, I think I am optimistic, because if you look at the government, we are beginning to see an improvement in revenue generation by the government. And that, to my mind, has somewhat emboldened them to slow down on borrowings. If you take a look at the financial market as we speak, we have a situation where government borrowing in the debt capital market year to date has fallen by 55% compared to the corresponding period last year. As we speak, the government have borrowed, a little above 3 trillion naira in government bonds versus a little above 7 trillion naira last year. So there's like a 55% contraction, and it happened only because the revenue is up. According to the president, revenue has been up by, over 40%, and they have met all of the full year forecast or budget in terms of non-oil revenue as at August. So this is an indication that they seem to be doing well somewhat on the revenue side, and there is a bit of a slowdown when we talk about debt in the local market. If that can be sustained throughout this year, and we have more taxes next year, then I think borrowing pressure will reduce for the government. And when borrowing pressure reduces, the public is going to feel it positively because interest rates most likely are going to go down.
Right. I'm talking about interest rates. This is a very crucial week. That's on the global side of things. Then we have upper week for Nigeria. And there's this consensus that there will be a rate cut, coming to the U.S., maybe 25 basis points. If that happens, what are you seeing as the impact? So
I think it is going to encourage frontier markets, generally speaking, to begin to think about, cutting interest rates, particularly for those of them that have not cut interest rates in about 2 to 3 years, Nigeria being a major example. We have been on a contractionary policy for about 3.5 years now, that we have either kept interest rates stagnant or we have steadily increased it. The next phase to my mind is an accommodative one, and it will not come if the US, for instance, is not dovish. So because we have the bulk of investment in foreign inflows, supporting our FX reserves coming from foreign portfolio investments. So it is going to be good for us because it will encourage the federal government, the CBN in this case, to also consider cutting interest rates, noting that inflation is falling. So it's going to be a good one. If we do not cut interest rates this month, I think November looks like a time to cut it.
Yeah, so we still have time.
We still have time, but we have to be careful around what the US does.
Right. All right, we'll keep tracking all of that. Thank you so much. It was great having your perspective right here. Mr. Tajuddin Ibrahim is the Director, Research and Strategy at Chapel Hill Dam. Thank you so much for coming on the show today.
Thank you for having me on the show.
Petroleum product pricing remains one of Nigeria's most sensitive economic issues, shaping households' costs, business operations, and government revenues. In recent years, we see digital petroleum pricing platforms. They've been introduced, to improve transparency, streamline data access, and enhance accountability in the downstream sector. But how effective have these platforms, really been? What challenges remain, and where have we seen some progress? Let's have that conversation now with Olatide Jeremiah, as the CEO of Petroleum Pricing at NG, joining me right here in the studio. It's great to have you.
Thank you so much for having me. It's my pleasure.
Fantastic.
Thank you.
So, sometimes you just wonder why pricing is always an issue, especially with products that everybody, uses, that you cannot say, oh, if the price goes up, maybe demand is going to drop. These are like inelastic, at this point. So talk to me about the pricing issue when it comes to petroleum products in Nigeria. Are we seeing any improvement with some of these digital platforms?
Okay, thank you once again. I'm going to give an historical background of the major challenges we've had in the downstream sector in the last 25 years. So we've always had supply challenges and pricing challenges. But due to the coming of Dangote, we've solved the supply issues that relates to queues at the stations, having hike, that will induce hike of petroleum products.
Even though we have some parties not happy with the Dangote refinery.
Yes, yeah. So the second factor is pricing. Petroleum pricing is a national issue. We've had situation where we've bought like 2,500 per liter in Nigeria. And because of that, I and my team thought it well that, we need to make pricing transparent to the stakeholders and to the general public. So we came up with a digital platform called petroleumprice.ng, where an ordinary user, a stakeholder, could track prices of petroleum products in real time. And over the last 1 year, we've had appreciation calls from stakeholders saying, we can now track prices in real time and make informed decisions on when to buy, where to buy, and who to buy from. So petroleum price is coming at the very right time, where Dangote is like up to say, we are coming to disrupt the industry, to make sure that what used to happen when you have prices hidden by some importers is the thing of the past.
So how does it really work? Is it like you just have somewhere where you can see all the uniform prices or price changes? How does it really help, having these digital platforms that, show up, when it comes to pricing and all of that?
Yes, it's just like a platform where you get to see price in real time. When I mean real time, it shows the last minute it was updated, and you get to know that, this price at this particular depot was updated 5 minutes ago. You get to have access to the depot, get to have access to marketers that sell those particular petroleum products. So it helps makes the industry transparent. It brings about transparency, and it helps you make informed decisions.
Well, does this kind of transparency, does it lead to lower prices at some point?
For now, it's going to help you save costs, because you could compare prices. On the dashboard, you could see 50 depots and their prices. So you could say, oh, okay, I'm buying in Lagos depot, and I have like 15 depot where I could track the prices and say, oh, okay, I think this depot has the cheaper price. And it could help you as a retailer to save some reasonable cost.
So when it comes to inefficiency, that's also a major issue when it comes to the downstream industry. How are these digital platforms also helping when it comes to that side of things?
Okay, well, for me, I'm going to give a big kudos to Dangote. He has sanitized the industry. We've not had it better in the last 25 years. But ever since Dangote came on board, we've had relatively low prices at the pump. Yes, looking at it, in the last 6 months, prices have not surged beyond 2013 era. It has been between 800, 820, 840. Yeah, courtesy the Dangote refinery. So I've always said that Dangote refinery has helped to improve the industry. Though I understand that we have several stakeholders that feel that, oh, Dangote is coming as a monopoly. But for me, I see it as him coming to make the industry more efficient and to drive down cost. So for petroleumprice.ng, what we do basically is to inform users, because prices are volatile. Just the same way we have oil prices. Oil prices today, you have them up, and in another few minutes they are down. So that same way with petroleum price at the depot changes in real time. In a day, price could change 4 or 5 times. So it helps you make informed decision that, oh, prices are going up. Sometimes we get massive views when prices are surging, because you get to see users, retailers, media houses, they go to the platform to get information on how the prices are surging. So I feel it's a plus to retailers, a plus to the stakeholders, and a plus to the end users in the industry.
Right. So looking at the industry, in your view, do you see other private refineries actually, pulling some weight?
Yes. Dangote has paved the way. He's a pace setter. In the last 35 years, we've had issues with our refineries.
We can hear some other refineries too actually reducing prices.
Yes. For me, I want a competition at the refinery level. For Dangote operating as a sole refinery. Currently, Dangote is the sole refinery in Nigeria, and it is not too good for the industry. So we are looking forward to BOA, that has a 200,000 barrels per day capacity coming up, and other modular refineries coming up to compete at that level. And possibly, I am also pushing for our public or our government refineries to be privatized, because if we don't privatize those refineries, we'll keep having this back and forth, this blame game. The depot owners saying, oh, Dangote want to monopolize the industry and all of that. But when some of those depot owners, those importers, they come together, they collaborate and get stakes in those refineries, there will be a competition at the refinery level, not at the depot level. Because looking at it, the depot business is winding out. Yes, the depot business is winding out. Dangote has the capacity to load 2,500 trucks a day, and that is close to our daily consumption. So depot owners should be looking towards going into the refinery business, possibly seeing out to woo the government and get stakes in those non-functional refineries, those 4 refineries that are dead. You should look forward to getting stakes there. And when they get those stakes, they will definitely compete with Dangote, because they are experienced, they've been around for donkey years, they understand the importation and the trading parts of the dam sector. So with that, they will compete with Dangote, and this blame game would be put to rest.
Right, and talking about the blame game, our data analysts here did say, Africa, Nigeria, we need to improve our trade in goods and services and reduce the blame trade. Yeah. It says there's a lot of blame trading,
yes,
going on, on the continent. But looking at it, continent-wise, and we see other, top African economies, they don't seem to have that much issues when it comes to, fuel prices and, getting a right price, for the product that, keeps the business in business and also, helps households able to afford, the product. So what do you think we can learn, from all these other top African countries? But I know they also have issues where, I think from more of East Africa, I've heard of cases where the fuel prices are coming down, there. So what can we learn?
Well, for me, I feel over time, this blame game will put to rest. It's because we are just going into the era of Dangote going into refining.
Refining is just about over a year old.
Yes, just over a year, yes.
Right.
So over time, I'm very sure they would come to the table to collaborate. But for now, the major issue between Dangote and the importers, it's the truck loading. The truck loading. The truck loading are exclusive business of the depot owners. They load through the truck to the retail outlets. But when Dangote came on board, though the PIA bill, section 317, subsection 8 and 9, enables an individual organization to refine and distribute. Yeah. However, at the same time, it is just more of an understanding between the importers that have been the whole takers that have been there before Dangote to have an understanding with Dangote. But over time, there will be this collaboration between them, and all of this blame game will put to rest. Because the truck loading has been the issue, basically. The depot owners are like, oh, you cannot refine and truck out. We've been around, we've sustained the industry since 2001, 2002. You cannot just come and take us out of the business. I understand their view. Dangote is saying that, oh, the law enables me to refine and distribute. Are you getting me? And I spoke with the CFO of Dangote some months ago, and he said Dangote reached out to the depot owners to say, oh, how do we collaborate together and make sure that you guys come to the refinery to lift product? But what he said was that a reasonable number of them said, oh, you are just starting. We need to ascertain your capacity and the quality of your product. For now, we will still be importing. Let's see how it goes. And a 650,000 barrels per day capacity is equivalent to 100 million liters. So refining, and if you keep refining and you don't have who to come lift those products, it's a big loss. So that's why you see Dangote saying, oh, okay, if you guys are not coming to pick this product at the refinery, we are going to distribute this product. But by and large, over time, I see the depot owners innovating because there is no space for free money, easy money is gone. Those days, the importers make good money through subsidy and all of that is gone. This time around, you just have to innovate and think.
I'm talking about fuel imports. Yeah. We spent 4 trillion naira on fuel imports for the first half of 2025. Yeah. That seems quite high.
If you compare it to last year, last year first half of last year, we spent 5.8 trillion naira.
5.8 trillion. Yeah. So this is 4 trillion.
Yeah. That's pretty below 5.8 trillion.
Right.
And the reason why...
Still high, though.
Yeah, it's still high. And according to NMDPRA, their last reports in June, they claimed or they reported that Dangote, Nigeria consumes 71% of imported products, while 29% is being produced by Dangote refinery. So it shows that we still import heavily in Nigeria. But for me, that is not too good. There must be a balance of trade. We should be exporting more than importing. 71% to 29% for me is an imbalance. It's a deficit trade. If you look at US, China.
Was it too soon? Refinery is just about a year old.
Yes.
Maybe after
over time,
3 years, maybe that
should decline. But over time, but looking at it, I feel Dangote should get more patronage. Yeah, it should be 50-50. Importation 50%, refining 50%. Though I understand that we need a balance of importation and local refining to give us that energy security. Even in US and in China still imports 24% of their petroleum products. US imports 13% of what they consume. India, that has the biggest refinery in the world, still imports 9% of what they consume. Japan still imports 70% of what they consume. South Korea still imports 5% of what they consume. So all over the world,
there's still an element of importation, but not
71,
big.
Not the way you have in Nigeria, where we have 71% to 29%. That is completely an imbalance.
All right.
Yeah.
I guess we'll keep tracking to see how we close that gap. When it comes to fuel importation, even though some people prefer that one because they make more money. Thank you so much, Latide Jeremiah, CEO, Petroleum Pricing out of NG. Thanks for coming on.
Thank you so much. Thank you so much. It's my pleasure.
All right, let's get a check on what's playing out with the global economy now. Starting with what we're expecting this week. We're expecting China's upcoming industrial production, retail sales, and other macro data will be important this week. Weaker data could pressure risk assets. Stronger data might raise expectations for stimulus or support. That's in China. Now we see major central bankers, they're going to be meeting this week. Other markets, see Bank of Canada, Bank of England, Bank of Japan, and other central banks have policy meetings this week. Some are expected to hold, for example, the BOE and the BOJ, while others might adjust rates depending on inflation or growth data. Then we have the big one there, the U.S. Federal Reserve meeting. They're expecting a 25 basis point cut. That's broadly expected now. Investors will be watching closely for the dot plot. That's projections for future rates and Chair Powell's guidance. How dovish or cautious they are. Then we see U.S. retail sales there. They're expecting that. That's sometime around Thursday and Friday. All right, let's get a check now on the UK economy. We'll have our London bureau chief joining us right now. Good to have you, Juliana. Good morning and Happy New Week.
Good morning, laddie. Happy New Week.
Fantastic. So we see President Trump expected to visit the UK. How's the UK preparing for that?
Well, there's lots of preparation, and it's going to be very, very expensive. I think, this has been valued at about £20 million, and it's been dubbed as historic. He arrives tomorrow with his wife, Melania, the First Lady, and he is to be hosted by King Charles III. This is actually Trump's second state visit. I'm sure you'll remember that he arrived during his first term when the late Queen Elizabeth was still alive. And of course, as to be expected, it was full of gaffes. He didn't listen to the protocols about not, walking in front of the monarch. So I think we're going to expect similar themes this time around. But it is, of course, a really big deal. It's a huge deal in terms of Washington and Westminster relations. I believe that Donald Trump's mother had Scottish ancestry, and he's always been very sort of in love with the royal family, and he admires them very much, which is why I think Sir Keir Starmer was very smart in offering this state visit so early on in Trump's administration. But of course, there are many other sides to this. The politics is also going to be involved. I think this morning there have been announcements saying that there is going to be a nuclear power pact signed between the two nations valued at over $50 billion. I think that Westminster are describing this as sort of a golden age of nuclear. So there's going to be lots of politics, but then also lots of scandal, because, of course, just a couple of days ago, one of Trump's staunch allies, Peter Mandelson, the former British ambassador to Washington was sacked ceremoniously because of his relationship with Epstein. We know that Trump also had a previous relationship with Epstein. So I think during their joint press conferences throughout the week, there are going to be some embarrassing questions. And it'll be interesting to see how Donald Trump tries to bat them away. But look, expect lots of headlines. There's always headlines, aren't there, Laddie, outside of, the Oval Office. But now the Oval Office is going to be squarely in Windsor Castle, so it's going to be an interesting week.
Yeah, once it's Trump, I just get my popcorn, ready. Are there expectations that his visit could have some kind of economic or market implications in the UK?
Not sure if it's going to have market implications, but I suppose it depends on what Trump says. I believe that he is likely to be followed by some big names from the US, including NVIDIA, perhaps OpenAI. We are still trying to finalize trade deals, aren't we, with the US? So especially during the state banquet at Windsor Castle, which I believe is going to have over 200 guests. I think there's going to be a lot of opportunities to do business. But then, of course, we know that Sir Keir Starmer is facing so much pressure domestically. In fact, questions are rising as to whether Starmer's going to last the year out, considering he's had a series of pretty high-profile departures from his main cabinet. So I think it's mainly the geopolitics, but of course we'll be crunching the numbers as they come in.
Yeah, we'll see if we'll get a deal there. But let's look at some other market issues now. We're seeing Sainsbury's, the shares hit a 4-year high. What's driving sentiment there?
Yeah, it's quite interesting, actually. Sainsbury's, which is one of the 4 largest grocers in the UK, their shares rose, I think, about 5% earlier this morning. And that's because over the weekend, there were revelations suggesting that a deal for Chinese e-commerce giant JD.com to buy Argos has collapsed. Now, Argos will be a brand very familiar to our viewers in the UK. I believe they've got about 1,100 stores across Britain within Sainsbury's. It used to be a standalone kind of, you can get everything from there. But Sainsbury's purchased it a few years back, and there were suggestions that this Chinese e-commerce giant JD.com was going to buy it from Sainsbury's. That deal has now been terminated, and shareholders are happy.
All right, I guess when shareholders are happy, I guess the pockets are happy at this point. But what key data should we be expecting the UK this week?
Well, I heard you talking about some of the announcements coming this week from central banks. So we've got our own central bank, Bank of England, voting on interest rate decisions on Thursday. We've also got unemployment data coming out tomorrow and inflation. So we've got quite a big week, actually. I suppose Sir Keir Starmer would want some of these data points to be positive so he can show off in front of the leader of the world's largest economy. But we shall have to wait and see.
Yeah, wait and see. Thank you so much, Juliana, for the details there.
Thank you, Laddie.
All right, let's get a check on what's playing out with other markets. Now, we see the US dollar actually ease marginally today, with the traders focusing now on the upcoming policy decision that's coming out this week. So we're seeing eyes on the DXY at this point. The DXY did add up a little bit. We'll see if that continues this week. Then we see Bitcoin rose slightly today, extending recent gains amid growing conviction that the U.S. Federal Reserve will cut interest rates this week. But the broader crypto prices, those retreated, while gains in Bitcoin were also limited by emerging concerns over the long-term viability of corporate treasuries, which were a major buying force for Bitcoin this year. Bitcoin rose about 0.7% to $116,000 as the world's largest crypto, added about 5%. That was last week. Then we see German defense group Rheinmetall said on Sunday that they struck a deal with the Leusen Group to buy its military shipbuilding arm. That's the naval vessels, Leusen, expanding into naval construction. The company did not disclose the price of the transaction, which is expected to close early next year, depending some antitrust clearance there. We know what's it called now? The regulators like to check out if the deals are going to benefit consumers and benefit the broader economy. right, so that's it for the Global Spin. That's it for the show this morning. Definitely a new trading week here, and definitely it's back to school. I guess we could call it the back to school, trade at this point. But keep your eyes on the show. We'll give you ideas and where to stash all of that cash. Thanks so much for watching Business Morning. Back at 1:30 for what's playing out with the markets that we track. Do stay with us.